What's up guys, welcome back to my channel. In today's video, I'm just going to mainly go over the current condition of the stock market, the crypto market, and probably gold and oil as well. Just to cover everything in case you're new to trading and investing and you're just wondering what the heck's going on, or if you're just trying to learn more about it, or if you're planning on making some moves. You know, maybe this insight can help you be more cautious with your entries and stuff like that. So first, let's just hop into the Nasdaq and see where we're at. This is the weekly chart, and I'll go to QQQ because this is just an ETF that tracks the Nasdaq. A lot of people keep an eye on this. All right, so this chart, it's got a lot going on. I've got this indicator here. This is my indicator that I made. I can turn it off and on. So let's just look at it without that first. White candles are bullish, blue candles are bearish. These green ones are inside bull bars, the red ones are inside bear bars. And each one of these bars is 1 week. Now when doing long-term investing and trades, and just looking at the overall picture of where the markets are at right now, you need to zoom out to the weekly chart, sometime even the monthly chart. But right now, you can see that the price of the Nasdaq has been stuck in this range for the past 5 or 6 weeks. You know, we weren't in the range yet here, but right here we got into it and we haven't gotten out of it yet. So we're in this range here between like 593 and 617. I have it marked there. And so far this week's bar is an inside bar, a little doji so far. We got some important data coming out later this week. We have PPI, some FOMC stuff, and I think it's Jerome Powell's maybe next to last FOMC meeting. We got unemployment claims Thursday. So we'll probably see some volatility later this week, but for right now, you know, we're just going to probably stay right in this range like we have been. When you're looking at the long term, you know, you should expect the market to keep doing what it's been doing until it gives you a reason not to. So this blue line I have here, that's the 200-week moving, or the 200-day moving average. I'm sorry, that's the 200-day moving average. So that tells you the average price over the last 200 days. That's a very important line that all institutions and big investors look at. This is kind of like, a lot of people look at it as like your last line of defense before further downside, because this line, the market doesn't get below that line very often. If you zoom out, and you know, you can count how many times we got below it, and every time it was some major event. You know, let's see here, we got below it there. That was the tariff news. This was August of 2024. I'm not sure exactly what happened there, unless that was around I'm not sure what that was. Maybe something with the election or something. You know, we come down close to it, and this is what you want to see here. You want to see a strong bounce off of that line. You want to see that holding up very strongly, a lot of buyers stepping in there, and we just haven't had it right here where we've been in this range. This is mainly because of all the fear and uncertainty going on with the economy. We keep getting told that the economy's fine, inflation's fine, but everybody knows that the numbers they put out are not accurate most of the time. Everybody knows that the economy is not that great because all of us, you know, feel the pain of prices going up at the grocery store when we go out to eat. And then the whole thing with Iran starting recently. So lots of fear and uncertainty in the market. So that has kept us from getting a nice strong bounce off of that level like we usually do. and we could potentially drop below it. But I don't know that we will see like a huge bear market or anything like we did here. You know, that was the big bear market that lasted a couple of years. You know, I don't know if we're ready for one of those, but we probably need some kind of a correction. And I've got this here drawn just as kind of like a worst case scenario, or at least my opinion of what a worst case scenario might be. You know, if we see something like this, that could last, you know, several months or so, but I'm not expecting like a 2-year bear market. But anything's possible depending on what happens in the world. But you can see right here, price has just been going sideways. So that's kind of like a top. You know, we saw this sideways action here before that drop on the tariff news. You know, we see some sideways action like a little top there before that little drop. And then you see this sideways action here before that bear market got started. And then you can go back however far you want. You see this sideways action on the weekly time frame, and then that was a nice big correction there. Didn't last too long, well, several weeks, but not too long. And then same here, sideways action, lots of sideways action here, and then one last little push there before that drop. But the main idea of this, just discussing this sideways action here, is now is not a time to be going heavy on the stock market with Nasdaq or any of the stocks on the Nasdaq, the Mag 7 or anything like that. So this is a possibility. We could see this huge ABC correction, or we could see something crazy happen with Iran that makes a quick drop, maybe down here to this major support level here, and then maybe we get a spike right back up, you know, something like that. If I can get my colors right. You know, maybe we see something like this green line. Maybe we see a quick spike down and a bounce back up, enough people buy here, and it keeps us going. You know, we could see something like that, but just be aware that this yellow path, something similar to that is possible. And even if, you know, the economy gets bad enough, we get a recession or something, just know that something like this all-out bear market back here, something like this is possible. You see, where's the Mag 7? Let's see, Nvidia. Well, Nvidia, not so much. It's still kind of topped out up here. Let me delete all this. So Nvidia is sitting there on that 200 also. So we've got this level here. Nvidia could definitely come down and tap that. And then we also have a level way down here. Where's my line? So that's a possibility. There's a little gap here, so anything within this area right here is possible for Nvidia. Because as you can see, we've been going sideways there, and we're not getting, you know, much buying happening off that 200-day moving average right now. So you know, Nvidia is kind of holding the market up here recently. So we could expect some downside, maybe at least something like this. That's possible, or depending on the news and what happens in the economy, you know, we could see something more like that. So this is just assuming we don't go into an all-out bear market, just maybe some kind of shorter term correction. This is something like what I'm expecting here. You know, we got this huge fair value gap right here. So that would make a lot of sense for Nvidia, but let's go over to like Microsoft. Microsoft has already pulled back quite a bit here. Let's see, there's a support like right there on Microsoft. A lot of people are probably going to buy down here at this level because this was such a strong level of demand here. And that was probably, yeah, that was pretty much that previous high there. So Microsoft's already below the 200-day moving average. It's way down here close to this demand zone. So Microsoft, you know, we could see something like this. You know, worst case scenario, we see something like this. You know, that's if we go into maybe like a bear market or something like we had back here, but I'm not sure that'll happen. You know, if the Iran stuff smooths out and maybe we end up, stuff happens where we end up getting rate cuts this year, you know, if things line up just right, you know, we could see just a quick spike down below here to the demand zones, pop back up there. Let's see, Meta, remove all this. Meta could see a drop. We could see, you know, let's see, there's a level here, and we got a level way down here. So there's definitely more room to drop than I was thinking. Microsoft has already dropped. Google has plenty of room to come down. You know, Google could actually come down to that 200, maybe get a little bounce. Possibly come all the way down to here, around 208 or so. Apple still in a good uptrend here, you know, on the bigger picture, but we're still depending on price holding on that 200-day moving average though. So we got a level down here. This is possible if everything else drops. You know, we could expect a drop like that on Apple. That would be a good place to buy right there. And probably like a level right around in here somewhere, maybe here, anywhere right in there. We don't have to drop that low, but you can see here we're making these highs and lows. You know, Apple could drop all the way to right here and still be in that overall uptrend. So just keep in mind, there's plenty of room for most of these stocks to come down. And then we got Amazon. That looks like a big old bear flag on the weekly time frame, right below the 200-day moving average. So that's definitely not good. We've got a zone or a level here, a little bit of a level there, and we're pretty much on this level here. So there's, let's see, there's a little bit of a level like right in here. So we could see something like this on Amazon. You know, we could come down and sweep this low. There's probably liquidity there. You know, this is possible for Amazon. Now, like I've said on some of these other ones, and the overall Nasdaq QQQ, you know, this could still be like an A, B, C, and not go that low. You know, that would be best case scenario, something like that. But the way that looks like a bear flag, and we got rejected from the 200-day moving average there. So we will most likely get another leg down on this, but I'm not sure if it'll be this big like I have drawn here, but it could be, so just be aware. Tesla, still just trying to hold that 200-day moving average. We've got a level here, right around 269. That was our resistance up here. Couldn't get past that. Let's see, maybe look right there. There's a little bit of a support. No, that's probably not going to hold there. Yeah, we're probably looking at this level, 269 or so for Tesla. If it falls below that 200-day moving average, which there's a really good chance that it will. But I expect all these stocks to get bought up big time at these levels because this will be a huge demand zone. Now Tesla is super volatile compared to most of the other stocks, so you know, just know that and be prepared because Tesla could get crazy. I mean, there's a level way down here. There's a lot of, here's a big demand zone right here, so that looks kind of likely for Tesla. Alright, so those are the Mag 7 stocks. Those are the ones that most people's paying attention to because they've pretty much determined which way the overall market's going to go. So, let's go back to QQQ. So just be aware that QQQ and SPY, these different index funds, they won't move as much as the individual stocks, but they will still move. So, you know, if those stocks drop to some of those levels like I was talking about, you know, we might not see this huge ABC corrective drop like I've got drawn there. We might see something, you know, maybe more like this. That's possible. That would be a nice healthy correction. Come down, retest this level here. We haven't retested that, so that's very likely. We have a fair value gap on the weekly time frame right here. So that's very possible. Alright, now I have this big box right here drawn for a reason, and that's just worst case scenario based on this indicator that was on my chart. I'm going to put it back on here and just explain what I'm doing with this. So this is an indicator that I made. If you're interested in getting this, you know, I made this custom script for this. It's on TradingView. I can get it for you and get you the instructions on how to install it if you're interested. But, you know, if you're trying to be active in the markets and manage your own retirement accounts or just manage your own personal investing account or whatever, and you want to know when to buy and sell at the best times, this indicator, that's exactly what I designed this for. It's really simple. So let me explain it here. It kind of makes the charts look busy, especially with these drawings on here, but the main goal of this, if we go back in history here, let's for example, let's go back to here. This was 2015. Alright, you see here this weekly candle got down into this green zone. This white dotted line is actually the 200 weekly moving average. So very rarely does the Nasdaq ever get below that level, or the S&P. So from this white dotted line to this first line here where this green zone ends, that is a 10% move. That's exactly a 10% move from the 200 weekly moving average. Every one of these different zones, it's 10% off of the 200 week moving average. So anytime the Nasdaq gets down into this green zone, you see what happens. Lots of demand. It gets bought up. We get a nice big move. And then once an uptrend starts, you know, if you bought in that green zone, you can ride that wave all the way up to this red zone. And then the next time it gets to that green zone, perfect buying opportunity. And even this blue zone is where the Nasdaq and S&P is considered a really, really good deal. This green zone is a super good deal. Like, this is where you should try to buy most of like QQQ or SPY, and probably any of the Mag 7 stocks, you know, because when QQQ is beaten down to this zone, those will all be super, super cheap at that time also. But even this blue zone and the yellow zone is a good time to be dollar cost averaging. So that's why I got these zones on here. And then if we go on up to when we had the bear market a few years ago, look how overextended we were and how long we stayed in this biggest red zone. That's a huge red flag there, that we're super overextended. The market's gotten super expensive there. So this is when, based on this indicator, is when you should be selling. So, you know, you don't have to sell everything you own as soon as we get up into this red zone. But this first red zone, that's a good opportunity to take some profits. Maybe take 10% off, something like that. We get up into this big red zone, and then you see a weekly candle like that, maybe take off 25%, hold the rest. You see another leg up, maybe take 25% off, see what happens. See another leg up, maybe take 25% off. And then if you have any left, depending on what strategy you're doing, you see this sideways action here that you can put a perfect box around. That looks like a top to me. So whatever's left, that's when you dump. This red zone here, yes, the market can keep going up once it gets in this red zone, but this is when you should dollar cost average out, basically be averaging out of your positions here. And then as we come back down and get into the blue zone, the green zone, that's when we should start averaging back in. And then here, like I said, this was the bear market, so this is a rare occurrence, but when the overall market is below the 200 weekly moving average here, that's when the big players, that's when they're gonna all be piling in as much as possible here. This is a deal you do not see very often. This is when the stock market, everybody thinks the world's ending. Most people are selling down here because they're panicking, their 401ks are down. It just looks like a horrible situation and things will never get better. But that's when smart money's loading up. And you see what happens when price gets below the 200 weekly moving average. We get such a strong impulsive move out right here. Just look at the strength of that move. Let's see, what did I do? I hit a button here. Look at the strength of that move. Then we got the retest, and look where it retested, the 200-day moving average. Then we had another huge impulsive move. A nice healthy healthy bull flag corrective wave. Another huge impulse, nice little pullback, impulse. And you can see we went up until we had that tariff news. And then we finally broke a couple of these previous lows here. And even after that, we got down into this green zone. And you see how price reacted there. You know, everybody was panicking because of the tariff news. A lot of people sold big amounts of assets out of their 401ks, their other accounts, or whatever. But the people who bought here, I mean, look at this gain. From right here, even if you didn't get the very bottom, you just say you bought in here. You know, and then you got out based on this sideways action like I was talking about, like what happened back at the top of the bull market the last time. You know, that's a 48% gain without even trying to catch the absolute top, just averaging out of your position up here, 48%. So, you know, you stick 50 grand in there, that's almost 25 grand. You stick 100 grand right there, that's almost 50 grand just from buying this one dip. And, you know, you don't put all your money in there at once or nothing like that, but once we hit this green zone, you know, you deploy quite a bit of capital there, because we could see some sideways action down there like this. So if it were to go lower, you know, you want to save some money to buy in lower and then catch the next move up. But this video is getting pretty long, but all I'm saying is this is some pretty bad sideways action here. We have a lot of stuff going on in the world, and we're not getting the strong bounces off the 200-day moving average anymore. So more downside is probably coming our way. Now, some of the Mag 7 stocks have dropped, and they're already a pretty good deal. There's people already buying some of them. Some of them, most of them, like we just saw, haven't even dropped that much like I had thought. So there's room for downside. So it's time to be prepared. It's not time to panic, but it's time to be prepared. And, you know, if we get a nice little spike up before we go down, you know, this red zone here, or even where we are right now, it's not a bad time to take some profits and set some profits aside, just in case we get down to this blue zone or green zone. Now, as soon as we get to this yellow zone, that's considered a fair deal. That means the stock market is priced very fairly, and that's just a good average price. You get below that, big investors see that as it being on sale. That's a good deal. The lower it gets, the better deal. The further above that yellow zone we get, it starts getting expensive. Big investors are not going to be buying, or at least nowhere near as much. You know, they want these good deals down here, and they're the ones that control the market. If the big money players aren't buying, the market's probably not going to be going up much more. So it's time to be aware. So the reason I have this big box here is just to show where I think we could possibly come down to. I think we're going to come down to that yellow zone, most likely. We got this fair value gap here. I think we at least tap that. So 544 on the Qs, 545, 550, something like that. If we see lots of selling, different events take place, whatever, anything can happen that can spook investors. So we could see a drop down here to this blue zone or green zone. Now below the white line, that's way less likely. That very rarely ever happens, but it could. But if we get down here into this area, right there, this blue zone and green zone, so pretty much like the top half of this box I have here, if we get down there, I will be loading up as much as I can on Mag 7 stocks, just the Qs, SPY, all that stuff. That's when you want to be buying. So I'm not a financial advisor, just been doing this for a while, and this is what I'm seeing on the charts. And like I said, if you want this indicator, leave a comment below and I can give you instructions on how to install it on TradingView. So that's the Nasdaq and the Mag 7 stocks. So real quick, let's hop over into gold. A lot of people got hyped up on gold, and it went parabolic. So this is what I'm thinking on gold. I made a video a while back thinking, or pretty much saying what I thought, and I think this is the top here for gold, at least for a while. Yes, gold will probably continue to go up in the very, very long term. But after a big parabolic move like that, you know, you see how expensive it is. Now, different things that happen in the economy, gold will always be a good store of value, but that doesn't mean it's not going to come crashing down temporarily. Now, it probably won't do this. It probably won't be a straight drop all the way down to here, but we could see something, we could definitely see it come back down to this 200-day moving average. Maybe bounce, something like this. We could chop sideways for a pretty long time. Then we could drop down until we get back into this zone down here. Look at what gold did before. The last time we had a huge run up like that, it went sideways for a year, and then it trended down for another year, sideways, and then further down for another couple of years, sideways for another couple of years. So gold, it takes a lot of money to push gold up like this. So it can't go up like that forever. And demand slowly kind of fizzles out, and people see other opportunities in different markets. So a lot of people will sell some of their gold, put their money in different investments. So a lot of people made huge amounts of money on this also. So there's some people that are going to take some profits on that and move that money to other things. So we could see a year of sideways action. I just would not be going super heavy on gold right now unless you're planning on holding it for 10 or 20 years just as a store of value to protect against inflation. But don't put your whole retirement account's money into gold thinking we're going to get another huge push up like that, because that's probably not going to happen. I think something like a sideways slow, sideways range like this for maybe a year, maybe longer, that's pretty likely, and then a drop. But I'd be very cautious going super heavy in gold right now. There will be better deals, so just consider that. Now let's go into oil. Said I was going to go over oil. So right now oil is $117, and you can see where we are. We're in this red zone here. Let's go over to the daily chart. Now I think we might push up a little bit more. I don't know how much, but this candle here was a nice strong bar, but today's bar is not looking very good. So we might not go up any higher, but we could. But same thing with gold, except oil will move a lot faster. So oil went up super fast, and it's going to come down super fast. It's just a matter of when. Yeah, we could see another push up. We could see 140 or 150. It's possible, but there's definitely no guarantee on that. We're super overextended on oil right now. So just be aware of that. This bar here, that's when most people took their profits. And then this is just this could end up being like a blow off top up here. We could go higher. If we do, I would imagine another big bear bar like that. So just be careful on oil. Now let's hop over let's put this back on the Qs and watch it. And then we're going to hop down here to crypto. This is a really long video, but for anybody that actually cares about this stuff and is actually trying to learn, I think this is a valuable video. But if you're not serious about this stuff, it's probably just long and boring. But all right, let's start with Bitcoin. Let's hop over to the Bitcoin chart. Weekly time frame, same thing. And this is also an indicator I made. It's basically the same thing as the one I had for the Nasdaq. It's just the zones are different. So this is the 200-week moving average, the white dotted line, same thing as the other one. But the zones I've done differently because crypto makes way bigger moves. It's way more volatile. So these zones are all 50% increments from the 200 weekly moving average. So for Bitcoin, as you can see last bull run, when Bitcoin gets in this red zone here, it's definitely time to start taking profits. And when Bitcoin drops below the 200 weekly moving average here, it's definitely time to buy as much as you can. And even when it's in this blue zone right here, between the green and yellow, just right here in this blue, that's when it's time to be loading up also. So just like on the other charts I showed you, Bitcoin very rarely gets below that 200 weekly moving average, and when it does, that's the best time to accumulate crypto. You can see what happened after we finally regained support on top of that 200 weekly moving average. You see what happened. We had the huge bull run all the way up to 124,000. The moment we really broke above that 200 weekly and held, we were at 28,600. So you could have made almost $100,000 per coin if you loaded up down here. Or you could have made $100,000 per coin if your average price was somewhere down here. So two main things to watch: 200-day moving average, 200 weekly moving average. And you know, this indicator is awesome just because you can pull up your chart and you can see exactly which zone any of these assets are in right then without having to really calculate anything. And you can just basically be like, oh, Bitcoin's in the blue. I think I'll allocate just a little bit of capital there, let it come down, allocate more. Oh, we're under the 200 weekly moving average now. It's time to start getting serious and making some serious investments here. Then we get above the 200 weekly, we come down, retest the 200 weekly, another good buying opportunity. So same thing, yellow zone here, that's just when Bitcoin's considered a fair value. So right now it's actually considered a really good deal, even though we're at 73,573. And so where is Bitcoin going from here? Well, we've already had one pullback, two really strong legs down. We had a strong weekly bar last week. It was an inside bar, but it was strong, that green bar there. So we could see something like this. You know, it might take a while, but we might have a little relief rally here. Maybe retest the 200-day moving average, and then maybe come down like I have this yellow line. I'm not sure we'll drop below the 200 weekly that much, but it's possible. If this corrective wave plays out to be anything like this overall all-out bear market was back here, if this plays out like that, then we could spend some time down here below the 200 weekly, and that would be an amazing time to buy any crypto you can. If it's a good coin, good project, it's been around for a while, that would be an amazing time to load up on all your favorite coins. Right now is an awesome time to be buying too, especially some altcoins. Everything's beaten down so much. Everything is on sale right now, in my opinion. So for Bitcoin, you know, I do expect another push down. I just don't know how high up we'll go before we get that push. You know, we could have a really explosive move up here about to where this yellow line is, where the yellow zone starts. We could come up and tap that and then reject down, and then maybe have a move down something like this yellow arrow. You know, it probably won't be as straight down as these last two legs. It'll probably be a weaker leg because there'll be buyers stepping in as we go. So we could see something kind of like this before we see the next push up for Bitcoin. If the whole market just takes a crap, everything goes into all-out bear market mode, then we would see further downside, and we could see a big move below that 200 weekly moving average on Bitcoin. So same thing as the Nasdaq, SPY, you know, right now it's just time to be cautious. Yeah, there's some good deals in crypto right now to be putting some money in there, but it's not time to be going all in. It's time to be, you know, maybe week to week or month to month, just allocate what you can, just maybe a small amount, leave some dry powder in case we get a further drop. So let's go to Ethereum real quick. Ethereum's trying to pop up right now to start the week off. And as of right now, which Ethereum's always more volatile than Bitcoin, you know, whatever Bitcoin does, Ethereum might do a 2 or 3x of that. So that works on the upside and the downside. So right now, Ethereum's had these two strong pushes down and we're trying to push up. We're below the 200 weekly moving average right here, this white dotted line. The 200-day moving average is way up here. So we're still in bear mode for right now. We could reject from that 200 weekly. We could pop up to the 200 daily. But most likely, we'll see another leg down for Ethereum. It might just be something like this. Or, you know, we can go up a little higher and come down a little lower. You know, any of that's possible. And if the stars align and miracles happen, there's always the chance we go up from where we are right now, because that's what nobody would expect to happen. So there's always that chance. So that's why I'm saying I'm buying some crypto now, because the altcoins especially, they're all beaten down. And you know, with what stocks have already dropped, you know, that's why people are starting to buy some of those right now too, because it's already considered a good deal. And then we're just waiting on the other ones to come down so that they're a good deal too. So that's basically where the market's at. I know this was a long video, but for anybody really trying to learn, I know you find value in it. And the main goal of this channel is to just share what I've learned and maybe help people get to the point where they're making money in the markets a lot faster than I did. So thanks for watching. If you have any questions, just leave a comment below. And like I said, if you would like this indicator for your charts, because it is really, really helpful just for long-term stuff, dollar cost averaging, when to start averaging out of your positions, it's super easy. It makes it really, really easy. And like I said, I've got the one for index funds, and then the other one is for crypto and the more volatile stocks. So that's pretty much it for this video. We just got to monitor the markets, see what happens with the Iran stuff, the overall economic data, which most of that we don't ever know what's right anyways. So the main thing to do is to just watch the charts. When it's in the sell zone, start selling. When it's in the buy zone, start buying. And that right there is the easiest, probably one of the most successful strategies you could ever do. And the way this chart's set up just makes it really easy to do. So hope you got some value out of this video. Subscribe to the channel if you haven't already. And I might do another short video soon just to do a quick market update, depending on what we do. But right now everything's just been going sideways, not much happening, so I haven't been making any videos. So I thought I'd make this one nice and thorough. So subscribe to the channel. Till next time, peace out.